2008, when the financial crisis happened, my life did not change at all. That really troubled me. My relevance to the world is probably not that much. Then thought, why not go to e-commerce? Probably this is the future. In 2011, Flipkart was one offer where I met people. The amount of energy I saw, it was just infectious. The key thing that Flipkart did over the years, just customer was the core. RTP had been in India since 2011, invested in actually great companies. Early days of Freecharge, then Cred, MPL, early days, Practo, Rebel Foods. Frankly, I did not know about RTP since then because they were a very under the radar fund. But when I started looking at the portfolio, it seemed amazing. And that's when I joined RTP.
What makes you believe about India?
India is a flirtatious geography.
Yeah.
And one of the biggest things from a returns point of view is Indian public markets have opened up for tech companies. Consistency in policy because what has happened at the center. We have the demographic advantage, the income levels are rising, we are an English speaking nation and can build things for the world. These are some of the great assets that we have as a country.
How do you see the Indian startup ecosystem evolve, let's say, by 2030?
There are a lot of things that are working for the country, but
Hi, this is Siddharth Aluwalia. Welcome to the Neon Show. Today, I have a partner who is an investor in Neon and a very dear friend on the podcast with me, Nishit Garg, partner at RTP Global. RTP Global is a brand name today in the venture capital world in India and across the globe. They focus from seed to Series A to Series B stages and have huge amount of successes in the portfolio in the past 20 years. Nishit has been an operator turned investor. Nishit's life began at Flipkart. He was one of the rock stars at Flipkart for 11 years, and then he switched over to the VC world. And VC world was not new to him. Previously, he had been at Tiger. Nishit, so glad to have you on the Neon Show.
Thanks, Siddharth. Glad to be here as well.
We'll start by your journey, right?
Sure.
Where did you grow up? What were your parents doing? And what led you to choosing IIT Delhi?
Yeah. So I grew up in Meerut. Near.
I'm also from Meerut.
Oh, I didn't know that. Oh, that's amazing.
So my family used to live in Defense Colony.
Okay, so I grew up in LLRM Medical College. My father was there. Yeah, my family is still there in Meerut.
Okay.
Yeah. So yeah, I grew up there. Went to DMA 1 out there, and then after 12th, I gave my JEE options of joining. At my branch, at my rank, I was getting civil engineering everywhere.
Yeah.
For me, one of the core things at that point was that I really wanted to be at a place where there is enough exposure.
Yeah.
And so I really wanted to, and this was in my mind, I wanted to choose Delhi and Bombay over the other respectable IITs as well. And that's how I joined IIT Delhi. There's no science around that. Amazing experience there as well. First of all, when you go to an IIT, you really get humbled because almost everybody who came in is a rock star in their schools, toppers, generally good. And the moment you land, you realize that you are not the only one, right? Your competitive ground has changed. So it takes a while to, figure out your identity there, your space there, what are the things you want to focus on. And I think one of the key learnings for me there was that you really need to prioritize well. You cannot do everything. Like in my earlier life in school, I used to do a lot of extracurriculars, sports, academics, everything.
And you still managed to get, let's say, a 3-digit rank or a 4-digit?
4-digit rank, not a 3-digit rank. But it was, and when I came to it, probably everybody was doing that. Lots and lots of people were doing that. So, and my first 2 semesters, I was a 6-pointer at IIT Delhi. But then I got my act together, where I really want to prioritize. So I figured out, there's a certain focus that goes on academics, there's a certain focus that goes on industrial projects, building exposure, and certain focus on not beyond a certain point on extracurriculars. So yeah, I ended up with a 8-point GPA, which was respectable, I would say. And I graduated from IIT Delhi in 2007. It was probably one of the best placement seasons ever. And I got placed at ITC in their projects division. Did 2 years of project management. I was like a construction manager at a site in Gurgaon, in Manesar, effectively. So that gave me again a great exposure of very early on. The great thing with organizations like ITC is, so I was there managing 300, 400 blue collar workers on the site. And as a 22-year-old, that's an immense responsibility. You are scared, but also you pick up. I think that was one of the biggest things ITC gave to me early on in the career. And then 2008, when the financial crisis happened, my life did not change at all. That really troubled me, that my relevance to the world is probably not that much, and that is probably continues till date to be my biggest FOMO, being irrelevant to what the world cares about. And with that thought, I did an MBA. Went to IIM Bangalore, spent a couple of years there, joined a consulting firm, did not enjoy it that much, and then really thought about what do I want to do next. Did a bit of research, figured out that there are two companies doing well globally. One is Amazon in the West, Alibaba in the East.
Yeah.
So then thought, why not go to e-commerce? Probably this is the future. Applied to anything and everything in e-commerce that I could get in 2011. And one of the companies which I got some few offers, but Flipkart was one offer where I met people. The amount of energy I saw in those folks, it was just infectious. And I moved from Gurgaon to Bangalore, joined Flipkart. Early years in Flipkart, I was really fortunate enough to be thrown at, say, any problem, the critical problems that the company was facing. And I was one, and in my first year, I did a lot of 3-4 month projects.
Okay.
First one was setting up supply chain processes for returns. Second was category level P&Ls. And then Flipkart was launching fashion, so building the entire infrastructure and processes for fashion. Then did marketing and merchandising for fashion for about a year. So it basically, there was supply chain operations, marketing, merchandising. It was a very, very well-rounded exposure, I would say. A lot of learnings. And then Kalyan Krishnamurthy, who is the current CEO of Flipkart, joined from Tiger at Flipkart, and I worked very closely with him for a year. On the business side, he was the CBO, I was assisting him. So then the first Big Billion Day happened, which was a great event for the country, humbling experience, because while it met its numbers, but a customer experience wasn't great. But it was, I think, a inflection point for Indian e-commerce, the first Big Billion Day. After that, e-commerce went to the nooks and corners of the country. Before that, it was just tier 1s, tier 1 cities. So yeah, and at that point of time, I was 30 years old. I was thinking what to do next, wanted to probably be a part of another 0 to 1 journey. Again, Kalyan had become a mentor by then, reached out to him that, can you introduce me to some of Tiger portfolio startups who are early? And he was building an India team. He asked me to join him, and I joined him. And the idea was, to work with probably a lot more of them. So I worked with 10 odd companies during my stint there.
Which were companies, if you can remember?
Some of them, Delivery, InShots, Grofers. In those days, Grofers, now Blinkit. But few, Culture Rally was one. So around 10, 11 companies. There were also companies that I had an experience of very early shutting down as part of that. But again, working with a really varied set of founders and problem statements was the excitement at Tiger. And the move from Tiger Black to Flipkart was also, just driven by people. So Kalyan had moved back to Flipkart for his role as CEO, and he wanted a chief. He asked me to come as his chief of staff. So joined him for 1 year as chief of staff. Then Flipkart wanted to revive its books, beauty, and general merchandise business. So Kalyan asked me to rebuild that.
Yeah.
So it was for 2 years I rebuilt that. I'd still probably claim that was one of my best stints at Flipkart.
The second stint.
And that role, that basically it was a real turnaround story within Flipkart as well. And that generally gave me a lot of confidence in life that you can be part of turnaround stories. And after that, I managed the Flipkart fashion business for 1.5 years. And at that point of time, it had over 2 stints, 9 years at Flipkart, 8.5, 9 years. I was thinking about what to do next in life. Talking to a lot of startups. The thought at that point also was to either join a late stage startup in a leadership position or a startup which is struggling a bit. I really had at that point of time. You were
fascinated by turnaround.
Yes, I was fascinated by turnaround. So I thought if there is something like that where, I can be a CEO of a company which small, needs a turnaround, that could be a great outcomes. But this was 2021. I think everybody was flying high. So there was there were not many opportunities at that point as well. But But I still, started getting the energy of the startup ecosystem, which was very different than the 2015-16 startup ecosystem when I was at Tiger.
What was the difference in energy this time and the previous time?
Yeah, I think there was in 2015-16. First of all, the velocity was very, very low. Success rates of startups in India, or I won't say success rates, basically the success stories were still not there. Like even in 2015, Flipkart was not a sure shot success.
Flipkart was a unicorn, right?
It was a unicorn, but it was not a short success what it is today. Right? It took then there were others. Ola was there at that point of time, but Ola Ubers were struggling with profitability, and there was. So I think 2018-19 is when a lot of these companies really became, what they are today. But 2015-16 there was not enough, I would say, support and examples in the ecosystem for founders to keep trying out newer and newer things. And that's what changed in 2020-21. There was a lot of energy out in the ecosystem. A lot of people trying. I think there was you can't deny that there was a lot more money out in the ecosystem. So it was easier to raise. Also, people like you, a lot of micro VCs came in who were supporting, founders earlier. And that the entire ecosystem just was very, very different. The number of companies that we, I think even what we meet today in a week during 2015-16 was probably in 1.5 months. So that's an immense difference in the amount of activity that has started happening in the ecosystem. So yeah, that was 2021, and that is when Galina, who is the other partner from the fund, reached out to me that they were looking for a partner in the region to set up. So RTP had been in India since 2011, invested in actually great companies. Frankly, I did not know about RTP since then because they were a very, very, very under the radar fund. But when I started looking at the portfolio, it seemed amazing. And I like one of my first few questions to Galina was how are you so under the radar after a portfolio like this. So I think the conversations went great. Realized RTP is a 24-year-old fund in India since 2011. Success stories like early days of Freecharge, then Cred, MPL, early days Practo, Rebel Foods. So a good portfolio out in the country and very well respected in the ecosystem as well. So, and I really met the entire global team. It was a real global fund that we are not a franchisee of a global fund here. So it's so really liked the DNA of the fund. And that's when I joined RTP in January of 22. And 2.5 years here, going on well.
Wow. And what was the difference between how Tiger operated and RTP operated when you saw both of them up close?
I think very two different stages of funds. Tiger at that point of time was more Series BC and doing probably one of the few funds who were operating in that segment. And so you would not have to really, do a lot of sourcing, do inbound. Everybody would want to meet you, show their companies. So I
think Tiger established the Series B market in India.
Yes, totally. Now I think there's a lot of credit to be given to Tiger for the 2011 to 16 work that they did in the country. So the amount of opportunities that got created because Tiger was willing to write so many checks around that point of time without getting into at a seed stage unnecessary you don't require 3-4 months of work to invest in a seed stage company. So I think a lot of credit to be given to them for igniting the ecosystem, I would call it. And then Series B, C, a lot of companies they supported. So Tiger was a very different ball game. I think Leaf Excel was very well respected out here as a partner. And then if I compare now, I think it's a much more competitive market. RTP in India, we operate in seed, Series A, sometimes early B. So there's a stage difference. There are very well established funds out there who have been in the country for 10-12 years. People really respect them. So you have to fight head on with them when you are talking to great founders. So it's very different than tiger in that aspect. Yeah.
And can you tell us more about the origins of RTP Global?
Yeah.
Like, how did it get formed?
Yeah. So the founder of the fund, he was an academician in his late 40s. He got the entrepreneurship bug. So
Tell us more about the founder first.
So our founder, Leonid, he originally hails from Russia, then became an academician in Canada. So stayed in Canada for a while. And then he was working on, say, those days of early days of, today we call it what transpired into internet. So neural networks and all. And so he launched a network company. It got acquired by, I would name one of the big IT firms at that point of time. And then he invested all of them in a company called Yandex.
This is when he was 40 years old, and
maybe at this time he was already in his 50s.
Okay.
Yeah. So,
and this is year 95 or 2000?
This will be sometime in late 90s. So he invested all of it there. And when Yandex made its US IPO, I think that's what generally the origination of.
And that was the $40-50 billion IPO back then.
Yes, and it was in terms of multiples, I think 350-400x for us for him, and that was the origination of the capital. And because he was an entrepreneur himself, he tried to keep that spirit in the fund as well. So 2000 is when basically the fund started. It started in early days out of Moscow, but then 2011 is when the team really became international.
And what was the first fund like? How big was?
I won't have exact numbers out there, but what I could say, it was sub 100 million. And we have in the past haven't raised a lot of external capital. So most of the AUM that we have today, which is in the range of 3.5 billion, is just proceeds of that early capital, that
the Yandex capital.
Yandex capital, yes. So that's the journey of RTP. Again, if you hear that story, it seems very unbelievable. It is these are the type of stories that all of us as VCs aim for in terms of returns. So yeah, it was very inspiring. And Leonid hired few people fresh out of campus in 2007. One of them was Galina, who is the other partner. They became analysts and today are partners with the fund. So Galina came to India in 2011, early days. And that's when she started investing in India. So that's been, and then the fund also started investing largely in US and Europe around that time. So 2011 is when we really became international as a fund.
Yeah. And tell us about how big have the fund, at least the previous funds been?
So the current fund that we are deploying is $1 billion vehicle. The one prior to this was 650 million. The one prior to that was 220 million. Yeah.
So you have taken big leaps.
Yes, there have been big leaps. Again, fortunate enough to have had some great success, because the way our capital structure works is we are new. Like this is RTP4 for us. RTP5 depends on what are the outcomes and liquidities from
what are the real DPIs from
this? Real DPIs from RTP2s for us. Yeah, that's how it is.
And tell us about the more of the larger exits that RTP has in the past that has contributed to the current fund.
So there have been great successes globally and in India in terms of multiples and in terms of absolute capital as well. Globally, Delivery Hero, Datadog will continue to be shareholders. Great outcomes for us. Even in the country, like Freecharge was a very good outcome for us early days. So yeah, I think some of these are the real power law examples that happened for us, especially Datadog and Delivery Hero. And that led to what the fund is today.
And how much percentage of your total investments are in India today?
So today, roughly 1/3. So today, the way we deploy our capital is we don't have a hard allocation, but roughly 50% of our capital we invest in, say, as initial checks. And this we try to allocate equally between, say, US, UK, Europe, and India, Southeast Asia. And then the remaining 50% probably goes in the best companies of the global portfolio. But it roughly boils down to 1/3 from that sense. It does not change a lot.
And how has India been in terms for returns for you till now?
India has been great in terms of returns. And that's, I think, one of the biggest testimonies of that is that the fund really wanted to expand here, hire another partner, have a team on the ground, a bigger team on the ground. So India has been a good story. Obviously, there are taxation and all in India, which is not there elsewhere. But in spite of that, we have had as I said, early days, some good outcomes.
Like free charge was one of the
Free charge was
outcomes.
one of the good outcomes. There were others. Some of them I cannot talk about. But even in the current portfolio from RTP2 and all, there is Cred, MPL, RTP3, Dehat. There are some very good outcomes for us in the country.
But you haven't taken exits out of any of these, right? So
no, not as of now. Yeah. So they haven't completed fund cycles, and we are also, we see potential in them. So yeah, there's no point of exiting.
And let's say, according to the data, right, what makes you believe about India? Because globally, funds like A16Z and others haven't really entered India because they're not sure of can India give that kind of exits or not.
Yeah. See, if you go on Wall Street or in Valley, where VCs are, India is a flirtatious geography, has been, right? Everybody feels, there's something there, but probably there are certain problems. There have been, people are skeptical about returns. People have been in the past skeptical about regulation out here as well, and taxation, all of these things. So 3-4 things have happened, I think, which today have given a lot of confidence in investing in India. I think one of the biggest things from a returns point of view is Indian public markets have opened up for tech companies.
Yeah.
Right. There could
but that
be
is still theory. You haven't exited any company to India.
Yeah, we haven't.
Markets.
But if you look at Zomato's deliveries, so people now you have examples, you have benchmarks where you so you can actually project some bit of your returns. As we speak, a lot of companies are moving back, domiciling back to India as well. So there are a lot of examples now. Yeah. So, and there is generally a better belief that there could be exits in India.
Okay.
I think that's it will still yet to be seen, but I think the last 3-4 years has seen some of them. If you talk about 5 years, 6 years back, nobody had any examples. Yeah. Any Indian company.
Flipkart was the only example people had.
Yeah, and it's not an IPO.
Yeah.
It's still from that point of view. Some of the IPOs that Indian companies had was still US, right? All of those. So Freshworks and all were all US. So I think in the last 3-4 years, this macro trend of tech startups looking at India for IPOs, that has increased. So that gives some definitive benchmarks on valuations, exit multiples, all of those. That is one. Secondly, I think in the last 5-6 years, there has been, while there has been regulation, a lot of regulation, especially in fintech, sometimes in some other sectors as well, but it has also, a lot of areas were probably gray at us, 5-6 years back. Today, they are black and white. So I think it gives you a clear idea of what the playing ground is. So that has also helped people. There have been a lot of, I think, initiatives from the government side on just enabling startups. Well, there's a long way to go as compared to some of the more developed countries, but I think there is a way forward. So macro level, these are the things that have changed. The story about, India consumption, all of those have been there for 10, 15, 20 years. We have the, demographic advantage. The income levels are rising. People are, we are an English-speaking nation and can build things for the world. I think these are some of the great assets that we have as a country. So yeah, so I think a lot of people believe, and you need to be here to really believe. You need to, a lot of our colleagues from our global team, when they come to India and they visit and they get amazed by in Bangalore, you go to a cafe, almost every table, there is a startup discussion. Either somebody interviewing somebody, a new idea discussion, or something like that. They really get amazed by the activity here.
And do you think the speed of velocity of execution in India matches that of the other developed geographies like Silicon Valley, US, Bay Area?
I think it is still a bit slower from that, because if you look at, so there are two types of businesses. There are pure tech businesses. There are tech-enabled operational businesses. Yeah. If I talk about tech-enabled operation businesses, operations in India is tough, right? There is, generally there are, if you look at an e-commerce company, early days, just logistics was so tough. So it takes companies a while because they need to take care of a lot of, a lot of stuff in supply chain, in their tech. When you build in, say, example, in a logistics company, when you build tech, you have to build tech for somebody who does not understand English very, very well, and has not really interacted with maps apps on smartphones and all. So that's how, when early days of e-cart and Flipkart, delivery, express, all of them build logistics, it was a very, very tedious and difficult journey for them. So in tech enabled operations business, India definitely takes time, right, from that. And we as investors understand that when we invest in such businesses, we know it's not a 5-year business, it's a 10, 12, 15-year business as such, from that point of view. When it comes to pure tech businesses, especially SaaS, AI today, I think getting to a workable product is way more easier. Where the question mark today, and the thing that a lot of our founders in the ecosystem, which takes away their night sleep, is GTM in the US.
Yeah.
I think that is where that's the big question for everybody, and that's where I think we don't have an answer yet.
Yeah.
Totally. There are some early proof points. A lot of Indian companies have started to reach 1 million, 2 million type of ARRs, but have not a lot of companies beyond a few that you can count on your hands are beyond the 30, 40 million ARR today.
But what do you think, right? You have first-hand experience because you were a key part of the Flipkart team, right? Flipkart executed, and Flipkart had all those hurdles, right? what you mentioned about, right? But Flipkart turned to be an exception. Why is Flipkart type of execution still an exception, not a norm in India?
I think there are, if Flipkart, I would say there is a lot of the credit has to be obviously in any company, but has to be given to the founders out there, early stages founders, and then having a CEO who also has a founder-like mentality. I think that's really if you talk about last 15 years of Flipkart, that has been the story of Flipkart. Early days, Sachin Bini, amazingly focused on customer, right? I remember early days, when we even started the returns policy, you always have people who abuse such policies on the platform. The founders were very, very clear. For 2% cases, we will not,
penalize
98%. We want to give them, best experience out there, and we should build processes and structures to manage the 2%. I think a lot of founders don't have that type of a conviction on some of those things. They start seeing, P&L leakages, certain areas, and they quickly move away from the core. I think the key thing that Flipkart did over the years, just customer was the core. Even, when 2015, 16, when there was some maturity in e-commerce, growth was getting tough. At Flipkart, it was very clear, okay, identify our customer today. And Flipkart really identified middle India as its customer. And what does a middle India need? It needs affordability. And anything and everything Flipkart has done in the last 6-7 years is affordability. Flipkart was the first one to come up with a debit card EMI, because they understand India as debit cards. So I think just the piece of understanding your customer, staying true to your core, was the secret recipe of Flipkart. Over the years, they've stayed true to that, right? And what happens with a lot of other startups or founders who do well during times of crisis? Look, Flipkart also went through a lot of crisis over years. Some of it is in some of the books people have written and out there, but the thing is, you really need to, when time tests you, that is where the core proposition of a company gets tested, and that is where founders also get tested. Do they really believe in the core proposition of the company? If they don't, they start putting, band-aid here or there, something like that, and then you lose the plot. Yeah, that's there.
And how do you see the Indian startup ecosystem evolve, let's say, by 2030? That's a fair time frame, right?
Yeah.
To describe how the ecosystem will grow, how the country will grow. And
so there are a lot of things that are working for the country today, right? In terms of, there has been consistency in policy.
Yeah.
Because what has happened at the center, that is one. There has been, as I spoke about, there has been a significant increase in good mentors in the ecosystem who can guide founders today how and when to fundraise, whether to fundraise or not. There are people, have a lot of people who they can go to refine their initial thesis, how to think about PMF, how to think about scaling up beyond that. Just the talent in the ecosystem is a lot more fungible today for startups. So I think a lot of things are working well for the country. There are things which need to happen, right? For it to continue like this. One is a lot of companies who are moving back to India for their, say, so-called futuristic IPOs, they need to do well.
Yeah.
Right? So if some of those outcomes happen, the trust of the global, I would say, capital holders would continue to increase in the country. If those don't do well, as I said, India is still a flirtatious market for a lot of people. They will not touch it. They will take further more time. So you want some of those people to keep coming back to India, deploy more and more capital. Indian funds also to just have good DPIs, build bigger funds so that they can. So just the rotation of capital needs to happen a lot more, and for that, a good, thriving, liquid IPO market is very, very important for tech startups. I think that's we believe. Like at RTP, we believe this is the thing that till 2030, if it gets proven, then then there's no stopping the country to be the number one promised land for startups.
The global investors also.
Yes.
Yeah. And you only talked about the IPO markets. You didn't talk about the other form of exits, M&As or secondaries. What about those?
See, M&As and secondaries. So there are, if you look at, there are two stages of a company when some of these M&As and secondaries happen. One is when you are a great outcome and somebody really big and strategic, sees that you have built something that they can't build, or they would take time to build, and that's when they acquire you. There have been good outcomes in the country, but there are few. And today, we don't see, for Indian companies, there aren't many options out there as well. Obviously, there are companies, for tech companies, there are players in US, there are the biggies, the Googles and Microsofts and Oracles and some of these guys, and they will always continue to play this game. So if you can build an outcome like that, but that is again a power law outcome. What is the other way of, other cases where M&A happens is a distress exit for founders. Nobody wants to back on that. But there is a wide majority of startups who would probably not fall into that power law, but will be smallish, great businesses, IPOable businesses. That today, why do VCs not look at somebody building a really profitable $400 million business? Right? And everybody goes after a unicorn is because everybody really believes in the power law, including us, right? That's how venture capital works. But if there is a series of outcomes of, $300, $400 million of businesses which have been capital efficient, been profitable from early days and good IPOs, I think the VCs will also start thinking very differently for those. So power laws are less, right? Power by nature, it's a power law, and you obviously all of us hope for our portfolios to have 10, 20, 30% companies really hitting it out of the park, but it's not easy, right? It's tough, and we see that in the ecosystem. So to really, there may not be Flipkart type many outcomes in the ecosystem, but there can be a lot more 500 million to a billion type outcomes in the country, and there has to be a good exit mechanism for them. And I think probably IPO market is one of the best ones that can play that role. Yeah. Otherwise, the questions about liquidity and exits in India will remain.
Yeah. Tell us more about power law in action. How do you describe it to a layman, and how have you seen it in your life, and what surprises you about it?
See, I think power law is very much in action. Simply, if you invest in 10 companies, there'll be only one or two who will probably really give you a big outcome. A lot of them will shut down. But
whenever you are investing, and especially in RTP, when you're coming at Series A stage, you have checked all the tick marks.
Yes.
That this company can give you huge returns. Why will you invest, right? But still, it doesn't happen in 9 of the 10 cases.
Yeah. See, I think this is a nature of anything that is any sector that starts doing well, there will be multiple entrepreneurs who will start going after the problem statement. The price is there. The price is there. Somebody will claim it at some point of time. But you need to be. But a lot of industries, there will be only 2 or 3 people who will probably become really big, right? But hundreds will try for that. So that's the reason power law works. And for us as funds, we see that probably a lot of funds take similar bets with different founders. Today, if you look at the top 8-10 funds, say Series A funds in the country, all of them would have a similar bet in the same sector, right? Say in fintech, all of them have a SME lending bet. Everybody will have a B2B commerce bet. Everybody, but not everything can become a huge outcome. So that's bound to happen. You need to believe that you are able to identify the right set of founders who have it in them to really, go through that entire journey of 8, 10, 15 years to continue to execute and be the power law outcome for you. Yeah.
And what is RTP's checklist for identify these kind of founders?
I think the founder's vision is one of the biggest thing, right? For us, founders who really want to go after a moonshot, right? Rather than, so that's one of the things that we really go after. We really check, right? We really try to get a view. And for that, you have to really understand and know the founder. You have to spend time with them. Where did they grow up? What motivates them in life? What is it in them why are they doing the startup, right? All of those. So I think that is one of the biggest things. And then checklist everybody has. What is the TAM? What is the margin structure of the industry? What type of, I think that is very, very a commoditized, I would say, view. But I think it comes down to the way founders, it comes down to founders. I think till Series B or C, it comes down to founders. Yeah.
And right now, right, we talked about venture capital is so competitive. How much of the goal in venture capital or the role in venture capital is winning the right companies today?
I think it's 100%. It's just that, nothing else. See, there is, as I said, there's no doubt India will have great outcomes in all the sectors we spoke about.
Yeah.
And it's just the economy is so huge. Anything that you pick, there will be a big outcome in the country. Now, but again, there are probably 100 people trying out something to build in B2B commerce today. Probably there will be 4 or 5 big companies out there. 2, 3 have already claimed the spots. So 2, 3 remain, and you need to identify those companies and get in them. I think that's identifying the right set of founders and companies is the only game in early stage venture capital, nothing else. See, there will always be risks, right? You need to believe that you are backing founders who will take care of it. Like, that's the belief you need to have in your founders when you invest behind them.
And right now, at such a competitive environment, what gives any VC the right to win? Or my next question would be, what gives RTP the right to win?
I think every VC has a different right to win. And when VCs and founders come together, it's a bit like a marriage, right? You really need to have the right vibe. You really need to have the right partnership mindset. Like for RTP, the way we think about it is that, see, our founder was an entrepreneur. The team's background, my background here has been an operator. We have a team from folks from, who have been operators in their lives, and a very good mix of investors and operators. And we believe, having that operator expertise in certain sectors, in certain type of companies, gives us the right to win. And that is one. The second right to win that we have is we are really global in nature. Like today, if we have to, any of our SaaS companies need certain help in US, we are probably able to connect them to the right people there, help them out with that. So we have identified our right to win as these. Now, wherever this proposition resonates with founders, I think we continue to win and we continue to have a good success rate. There will always be cases founders don't need that, right? They may need something else which you don't have. It's perfectly fine, right? So, and that's how it happens. So, but every VC fund in today's day, capital is slowly and gradually becoming a commodity, needs to have a right to win. Yeah, and we strongly believe that.
And for founders, right, picking the right VC, because when it's like dating, right? Everybody try to show the best side of themselves. How do they pick that? Is this the right investor for
me?
I think,
like, whenever people ask me about this, I tell them the same thing. You should talk to whichever fund you are talking to. Talk to the founders of that fund. Founders can talk amazingly well to founders, give the right amount of feedback about funds, what are they good at, what are they not good at, so, and then the founders can decide. I think there is no point in going to there's a lot of marketing about funds out there. the real proof of the pudding is talking to a founder who has worked with the fund. I think there's nothing better than that. Right? Yeah, this is what I recommend to any company that we are getting into a partnership with. We really, really recommend them to talk to some of our founders. They should also understand how do we work along with our companies. So that's very important.
And for founders, right, today, differentiating between funds almost become impossible because these are not like, these are the best of professionals and best of the funds.
Yes.
Right. And talking to founders also doesn't give an edge. So ultimately, if you have to, think about a fund's moat, what would it be?
Okay. See, some bit of it depends on your stage of the business and how do you see your business evolving. For example, if you are a early stage fund in SaaS, early stage company in SaaS, and you already have a POM, you would want a fund that can actually help you get customers, right? Rightfully so. If you are somebody who's building a capital intensive business, you want your investors who have deep pockets, who can back you up for the longer term. So some of these things are very much dependent on the stage and nature of the business. And then the third factor is, see, whenever you are getting in investors, it's like getting, it's getting into marriage, right? So you need to really believe that will you be able to survive with this person for 10, 15, 20 years, in marriage. There will always be disagreements. I think that is the beauty of it. Right? Disagreements may ensure that everybody wants to ensure that the company becomes successful. I think that's the ultimate objective everybody has. Do you believe when you're getting an investor that that person will also operate like that for your company? Will they stand with you in thicks and thins? I think that's the most important. No company has just a high ride. Companies will go through bad times, and you need to really believe that these are the people who will help me out, stand with me at that point of time.
Nishit, you talked about earlier in the podcast that you were very much driven by the fear of being irrelevant, and your choices played out right? Yes. Leaving ITC, like most folks, I think in your batch who have joined ITC would have carried it for a long period of time. Right? Identifying Amazon was not so popular in 2011, or e-commerce was hardly popular in India. Identifying that and joining that. So how has that played over even the current choices, right? Being a VC.
I think that I feel that thinking helps me a lot, because that this FOMO of relevance that I have always felt in personal life, and my choices are driven by that. In VC also, you are trying to, at every point of time, you are trying to predict the future, what's going to happen. I think generally that mindset helps you a lot not to get stuck in the short-term wins. And that's the biggest thing this outlook gives you.
Tell me more about it, because even a short-term win can make you relevant.
A short-term win can make you relevant for a short period of time, but then, for example, if you are a lot of people who have been, it has happened to a lot of companies in India as well. There have been travel companies, there have been companies in the classified spaces and all, who were very big at a certain point of time. And a new player came and disrupted them because they felt they were too big to fail. Nobody's ever too big to fail. I think that's the realization I have had. So you need to constantly be at your toes, consistently, upskill yourself consistently. If you are a founder, make sure what is your proposition for the company. Like if you talk about customer experience, right? Today, there was a certain point of time, 2008-10, there was no customer experience in the country. Flipkart probably played very, very well on the customer experience, building that trust. But what Flipkart was offering in 2013 is commoditized today. Right? That next day delivery, people, we are talking about quick commerce now, right? So you really need to disrupt yourself. I think that's the real trick. How do you as a founder, you need to keep thinking, what can disrupt me? If you think like that, you will be able to your company will always be agile. You will be able to invest in their newer things. As a VC also, when you work with your companies, what are the things that can disrupt your companies? From those, obviously you can give those views to your portfolio, but you also start thinking about newer opportunities with that.
But as a VC, this thought, right? You are in the backseat. The founder drives the company, right? And whatever advice you give, it's ultimately
totally
the founder. don't you think that this characteristic that, hey, can I be irrelevant, in VC is not in your control?
It is not in your control, but I think it, as a VC, you are you're sitting in the stands. You are more like a support staff to the team. You need to consistently show them the mirror, show them the reality, right? And after that, it's their call. They are giving their 24/7, their days in and out. So, but if you believe in something as a VC, it's most important to consistently give that feedback. I think you definitely, one of the biggest mistakes some VCs do is always be really nice to the founders and not tell them what the market realities are or what they're seeing out there. You can't be a great VC by playing a popularity game. Right, totally. So it's very important to do that. At the same time, as you rightly said, it is no founder will just listen to you because you came on the cap table. You are on the cap table, right? You have given them some money. Right? So I think over time, founders, like your relationship with the founders as a VC, like all my founders that I work with, they know for what areas, I am relevant, I am not. Right? For certain areas, if I open up my mouth, they will probably disregard it. Or certain areas, they feel I am able to give a right view, they will, listen to it. In fact, a lot of times they will act the real. Actually, this is the real. When founders start asking you certain things proactively, bounce off certain things proactively, that is when it shows that they value you for this expertise.
That's
or
when
this
you feel
type
that you are relevant.
Then you feel you are relevant, and it is okay. As a VC, your job is not to run a company. Your job is to back the founders and trust that they are going to run the company. So. And VCs think about, a lot of VCs have a huge portfolio. You don't think about a company 24/7, right? So you cannot do justice to, and say that I will define the strategy of the company or I will. That's something that you cannot do. What you should definitely do is keep sharing feedback. What you see, what are the pitfalls of the decisions that the company is taking, what are the goods and the bads, and after that is the founders' call. That's how we really operate with founders. We often have disagreements, but our disagreements will always be within closed doors with them. And whenever the founders are taking a call, we'll stand by them. Because at the end of the day, you have to believe that they have taken into consideration everything and they are taking the right call for the company. So that's how RTP operates globally. That's our DNA, right? And it has worked well for us till now.
And according to you, right, you are constantly taking many kind of risk while betting a company, right? Will there be a winner, as you said, right, among the top 3-4 players in their category or not? What are the risks that you are not okay taking when you are betting?
I think some of them are very, very obvious. If you have you really need to, if there are issues that come out in diligence with respect to financial, ethical, and those are you just stop the conversation there. Then there are other risks in terms of, I think at every stage you would want, there is a different combination of founder maturity and traction of the business that works. So you would not want to take a risk where you feel the sector is very, very developed. There is immense competition, and there is someone who comes up with a very, very naive view out there. So I think it's a very abstract question to say what risk you are not okay to take. I think at the end of the day, there is no checklist for a VC. When you invest, when you don't invest, it's a gut call. Right. If the gut says no, don't invest. And I think one big checklist, or I would say a question that whenever I invest, I talk to myself: will I be okay to invest a significant personal wealth into this company? Right. If your answer is no, just don't invest. It's basically something internally is telling you that you're not ready to underwrite something.
And how much of the decision making is non-consensus among the team?
Different funds operate differently. So we also have a global IC, and there is a certain consensus that we require. And I think more than the consensus, it is about getting everybody's views, everybody's understanding of the company, their questions around what risks, what could the company's path be. I think that makes us better investors internally. I think it's not required. We try to build consensus. For us, the way it works is, even after that, if really want to do something, there is flexibility to do that. We do that. Like there has been, when we did our first foray into EV, one of the deals that we did, it was something that first, nobody had done that in the fund ever. We did not have a great thesis by that point of time as well, but we really liked the founder and what he was building, and the deal team there here in India was super bullish on that. So we did it in spite of not having a consensus. So different funds operate differently. For us, you try to achieve a consensus, but we always have non-consensus bets, and a lot of times non-consensus bets are 0 or 1. Like either they become moonshots or they become 0, because they obviously have a lot of risks, and that's why there is no consensus. But they also have, why somebody will have a huge conviction on them is somebody believes in something. If it comes out to be true, it's a moonshot that happens.
And how much target addressable market risk, TAM risk, you are okay taking?
I think this is a ongoing question in the VC community, because there are a lot of examples of companies expanding TAM.
The best companies expand the TAM. There's no TAM at that point in time.
Yeah. So you need to...
Flipkart expanded TAM.
Flipkart expanded TAM. See, you really need to believe again, in the founders. It comes down to that. And a lot of founders would have thought about it. Right?
But first time founders don't really think about TAM. Sachin Bini wouldn't have thought about
TAM. They have not
TAM.
thought about TAM, but they would have thought about that India has so many shoppers. Yeah. They have that a significant percentage of them would at some point of day come online. And how it will happen, nobody knows. Even think about Cred, right? The way the business has expanded amazingly well in our portfolio. Talk about I gave an example of Dehat. Right? Shashank as a founder, he always believed in it. But if you start with the TAM of people today who are willing to work with a platform like that, it was very, very small. Yeah. He really created the TAM in Indian Agri. So yeah, I think TAM is, in some cases, it's a very obvious answer where, there's a certain scale that D2C brands in our country will have. And there are funds and it depends on the fund math, right? Certain funds, certain size, certain type of return profile, it works beautifully for them. For certain funds, it does not work.
Yeah.
Right? So you also have to see what the TAM profile matches your returns expectations, fund expectations. So TAM is I completely agree. Best founders increase TAM. So TAM is generally, it's more of a checklist rather than that. At times, at very, very few times, it is very obvious that it will be very, very small, does not get into. You cannot do anything about it. But there are times you would believe that these founders probably can take up the entire market as well, right, if they do well, and expand to other countries, expand anything and everything.
Yeah, I feel most companies that are past that seed stage by most investors are because of low TAM, and companies like, there are enough examples, Uber, Airbnb.
They created a new business model altogether. Consumer need was not there prior to that.
Yeah.
Right? Totally. Yeah. So you need to... Yeah, I think that's where the VC's gut calls come out. If your gut call is coming on that these founders can actually do something special in spite of low on paper TAM, you will underwrite them. Yeah. Otherwise, you won't.
And there are companies that even go into adjacent TAMs. For example, when Notion came out, many VCs passed because hey, the world doesn't need another word document maker.
Yeah. True.
Right, but it was one of those companies that expanded the market of.
Think about all the Zoom as an example. Skype had been there for ages, and at that point of time, everybody look at who uses video conferencing, right? For corporates, you have in offices the corporate, the Cisco's and all their systems and all. As an individual who uses, see how it just changed everything. So you need to believe if a product can become a real disruption, then the TAM increases.
And today, because now there are plenty of second-time founders in India, everybody wants to go after second-time founders. But let's say when Kunal started Cred, right, he had huge success. So every VC wanted to be part of Cred story. But where does then it leaves the edge for first-time founders? who don't have a huge operator background also.
Yeah. No, I think there is always they will always have an edge. See, the great thing is a lot of these first time founders also have today a lot more refined worldview on the problem statement. If you haven't thought about it, it came out of a friendly drinking conversation with your friends, it's very easy to spot on that the person has not thought about it, right? But a lot of first time founders have thought about their problem statements. We continue to invest in first time founders as well. Obviously, I think the difference where it comes in, first time founders, if they build a good traction, that is where we see somebody starts believing them a lot more. So the second time founders, you have already seen them, right, do something, so they can raise, as we've seen, second time founders raise huge seed rounds. First time founders, if they do well, raise better series A and B.
Yeah. And why do you think in India there's a specific case that companies are able to reach 10 mil ARR across sectors, but 10 to 100 journey is the most difficult for Indian companies across sectors?
Yeah. If you talk about, say, B2C or SaaS, I think this is the story. It is, see, if I talk about first B2C, India is just so huge. Any sector you put in, like Indian agri, you put in anything in consumer, you do something, if you got something right, you will reach that number. It's just because
10 million.
Yeah, 10 million. It's just that huge market. If you take about SaaS, if you are operating in the US, customer base in US, if again your product solves a basic need by PLG motion or some very early sales without building a huge sales engine, you can reach that 5 million, 7 million, at times 10 million ARR as well. But after that, a lot of things need to play out. You need to think about a much deeper, deeper understanding of what is your net dollar retention, how do you really land and expand into your clients, how do you manage churn out there, and it gets a bit more deeper than just a product problem. It becomes a customer success problem, it becomes a sales problem, it becomes a upselling problem. So a lot of new problem statements come in, and you also are battling competition in all those areas. So and when that happens, few people are able to do that out of the huge lot, and that's why after this 5-10 million ARR, you suddenly see a drop in the people who are able to achieve it.
Whereas US companies that are able to reach 10 million ARR, they have a high success rate, that they reach 50, 100.
Yeah, I think there is a huge piece of the sales engine. And where today the Indian SaaS ecosystem struggles is the sales ecosystem, right? A lot of enterprises or say mid-market sales in US happens through relationships, right? And it takes years to build those relationships. So when an Indian company is expanding there, first of all, we believe that one of the founders needs to be there, right? To really do that. You can't, and you also need to hire some people from the ecosystem who bring along some relationships with you. And you have to, unless this happens, both of these things happen, it is very tough to build multi-million-dollar sales out in the US.
Well, what I think is that Indian founders have become great at building good products, right? In the last 10 years, they've also become really good at customer discovery. So there's a huge, I'll say, pipeline of talent in the product management.
Yes.
In India across B2C and B2B. I think where Indian founders, it's a cultural thing. We are not really taught how to sell.
Yes, never. Yes.
I think sales is looked down upon, right? It's called a salesman.
Yeah, it's not a natural skill set, as you said. It's cultural. You're never taught to generally sell yourself, talk about yourself, all those things. But people pick it up. That is one capability piece. Secondly, see, if the customer base in the US, you need to really be there, understand what their needs are, have those relationships, and it takes time to build those relationships. In a lot of enterprises, those, if you have to land an enterprise client, you have to really figure out some wedge into that enterprise with a small team in a certain function and then expand. You cannot actually expect that a big enterprise will give you a huge contract from day one. Right? So the sales cycles are longer. You need to be really strategic about it, and consistently you have to just keep pushing.
And now your portfolio has several scaled companies, Rebel Foods, Cred. What are your learnings on scaling from them that you're trying to replicate across the other portfolio? Or are there any learnings, because each company is so different in nature?
I think I agree on the second piece. Every company is very, very different. Every company's story is very different. I think two things that really stand out. Or I can say, you founders who are, again, as I continue to think, what can disrupt their companies? I think they are able to really.
Kunal really thinks well on this,
Yeah,
right?
very, very well.
The kind of acquisitions that he has done are
Exactly.
Nobody would have thought that Cred would do B2B acquisitions.
Yes. So Cred is a great example of that. So I said, you need to be a futuristic founder, and for that, the best way to think about is what can disrupt your business, and you keep on building that. I think that's
I think Cred has also been one of the most criticized companies.
Yes, and continues to be at times. It is, but
there's
as an investor,
a lot of memes on Cred coins.
Yes. See, the best thing is competitors are using that as in their advertisement, which shows actually it's a strong, there is an identification of the brand out there. Consumers really know it. So it's a good validation, probably not in the best taste, but it's a great validation. So as an investor, we are very happy with Cred. There has been lots of ups and downs there as well, but they have continued to figure out, right? Kunal is great. Kunal and the team have really continued to innovate, getting into newer and newer businesses, and continue to scale revenues out there. So that is one. The second thing is, how do you operate when there is crisis? I think every company will go through a crisis, right? There is a crisis. There has in the fintech ecosystem. There is some crisis in the gaming ecosystem, but a lot of companies have come out of it. So we are also, investors in Slice, and Slice have figured out a path out of the regulation, and now they're building it that way. So there is, you really, how do you handle crisis? At that point, are you able to figure out you're sticking to your core and figure out a new path for yourself? I think that really stands out. A lot of companies have to go through certain pivots at times of crisis, right? Including the big ones. Like if you look at Ola, what Bhavesh has been continuing to do and newer things, right? Starting with what he was, then Ola Electric, and now Kritrim, right? That's a great example. Flipkart has continued to do more and more things, launching new categories, acquiring Myntra at a time when Flipkart had no fashion play. Acquiring PhonePe in those days was such a big strategic decision, right? So some of those things have been, you have to take some of those bold bets, which actually can give you a long-term advantage. And for the way to do that is think what can disrupt yourself. And for a Flipkart, around that point of time, the question was, where else can consumers go, right? And try to, if you believe that consumers can go on these destinations, try to have a Flipkart offering for that type of a proposition.
Clear trip for travel.
Yes, clear trip for travel. There was a pharmacy company acquired. So there have been, obviously, some of them fail, some of them do well, but you need to do that very, very well.
And how do you replicate this across your B2B SaaS portfolio, that what can go wrong?
I think, B2B SaaS has to, today, actually, if you talk about in the software space, right, B2B SaaS space, the only thing everybody talks about AI, right? And it's a very valid question, right? How can AI disrupt your business? Do you have an offering that can take care of that? I think one of the biggest things the Indian SaaS ecosystem continues to have is a cost advantage. As you rightly said, Indian founders are now able to build great products. They are building products and not just features, full scale products. The art of selling is still to be figured out. I think SaaS from India has still not seen that type. There are a few success stories, obviously, Freshworks, some of the Postman, some of these have been good stories for the ecosystem, but SaaS India still needs to have a playbook for selling the US. US is the biggest market where people pay for SaaS products. And I think the playbook is not clear today.
Well, thank you so much, Nishit. I enjoyed our conversation a lot.
Likewise.
I think a lot of what you contribute today comes from you spending a huge amount of time as an operator at a very fast pace.
I agree. I think I continue to say Flipkart was an amazing journey for me, once in a lifetime opportunity. A lot of it is that, and the people that fortunate enough to work with at Flipkart, at Tiger, and continue to work with today at RTP. Yeah.
Thank you so much again.
Yeah. Thank you, Siddharth.